Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. On Monday, new home sales for August fell by 7.6% to an annualized 609,000 units. However, it was still considered a positive report because sales are up over 20% from a year ago. Investors were nervous awaiting the outcome of the first presidential debate, and markets fell with the Dow Industrials closing down 166 points. On Tuesday, the Case-Shiller Home Price Index for July remained unchanged month over month and increased 5% year over year, while consumer confidence for September rose 2.3 points to 104.1, its highest level in 9 years. A deal to limit oil production looked bleak, and U.S. crude futures dropped over 2.5% to settle at $44.67 a barrel. Markets rose on the news, and the Dow Industrials gained 133 points. On Wednesday, durable goods orders for August remained unchanged compared to the previous month's 3.6% gain, and the EIA Petroleum Status Report for the week ending September 23rd showed crude oil inventories dropping by 1.9 million barrels. Oil surged, with U.S. crude gaining over 5% to $47.05 a barrel on news that OPEC has reached a deal to cut production, its first cut in 8 years. Markets rallied, and the Dow Industrials closed 110 points higher. On Thursday, the second revision of the second quarter GDP gave an unexpected surprise, being upwardly revised by 0.3% to 1.4%. Jobless claims for the week ending September 24th rose 3,000 to 254,000. Banking stocks fell as the future of Deutsche Bank was called into question after being hit with penalties in the billions of dollars by the U.S. Department of Justice. Markets were down sharply, with the Dow Industrials closing off 195 points. On Friday, personal income for August rose 0.2%, consumer spending remained unchanged, and the PCE price index rose 0.1%. Rumors also came out that Deutsche Bank was about to reach a settlement with the Department of Justice, and markets rallied strongly on the news. Now let's take a look at some stocks. Shares of Fitbit plummeted over 9% after it revealed that sales of the company's latest wearable device, called Charge 2, are off to a sluggish start. Also, health insurer Aetna's deal with Apple to reimburse policyholders for the purchase of Apple's iWatch doesn't look good for Fitbit. Nike posted solid first quarter revenue and profits that topped estimates. However, future orders fell short of estimates, raising concerns. Nike stock was down 11% this year at Tuesday's close, the worst performer on the Dow Jones Industrial Average. Clinical stage biopharmaceutical Galectin Therapeutics reported that its phase 2A study, called NASH-FX, in regards to its GRMD02 therapy, failed its main and secondary endpoints. The therapy is designed to help patients with various liver problems, including fatty liver disease and cirrhosis. Right after the announcement, shares of the company slid 50%. Paychex announced its first quarter earnings, missing expectations. The company reported earnings per share of 60 cents on revenues of $785 million, compared to consensus estimates of 57 cents per share on revenues of $782 million. Shares were down over 4%. Supply chain and electronics manufacturing services provider Synnex has announced quarterly earnings beating analysts' expectations. Shares were up over 7% after the company reported earnings per share of $1.73 on revenues of $3.7 billion, compared to consensus estimates of $1.56 per share on revenues of $3.5 billion. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.